Okay, this series is about balance areas, and this is what I trade. I trade these rectangular boxes, what I call balance areas, and they happen on, well, I think just about every chart that I can see. Here's one for the Dow, and there's a balance area. You know, they're all over the place. Balance area, you can trade those. This way you can see where the market's going. So right here, this is a tiny balance area, and these small ones here might be a little bit difficult to trade, only because well, let's see here. I'll get this rectangular. Here's another one here. Oops. Okay, so you get the picture. There's balance areas all over the place. Little ones here. So the small ones, the thing with these small ones, you're going to have to determine, because they don't grow. Like, these are pretty big, and like I mentioned before, when they're big like this, when they do take off, they take off whatever direction in a pretty big way. And when you have small ones like this, not so much, but you got to remember it's starting to reach the top. So there's a lot more to just trading balance areas. You're going to have to learn these markets, and you're going to have to feel them, and eventually you get to the point where it feels like it's like your best friend or your partner. You know, you can almost predict what they're going to do. And this is the same thing. This is traded by hundreds of millions of people and institutions, so they develop patterns too, all as like one entity. And that's what these are. These are all patterns, and they're predictable as far as when this breaks out. If it breaks out going down, then chances are it'll probably continue. And if it breaks out going up, chances are it'll probably continue in that direction. The only way that, well, here's another thing. You have to kind of figure out when a market comes up here and it's kind of close to a top, if it breaks down, then it looks like it's probably going to go in that direction. And if it breaks up, because it's kind of reaching an extreme point, it's probably not going to go too much further. And it went to this point and it got small, and then it came down. So it does make sense in that way, where it's starting to get extended, and then it comes down, and it seems like it's extended going down, and now it's time to go up. And there's no indicator that's really going to tell you when a market's overextended. I know they have indicators for oversold and overbought, but they're not accurate most of the time, only because the market can go way overbought or way oversold. So you want to use your indicators along with these balance areas. Well, then that might be a good thing. It's I just rely on my indicator, which is my intuition, because I've been trading this market for so long. It's almost like I know where it's going to go. And you'll get to that point too, but maybe you need some indicators. I'm not sure. I'm just not an indicator guy. So we'll take a different chart. We'll go into Bitcoin. So here's a good chart. I like this chart, actually. This is a 4-hour. So you can see how it's been balancing for a while here. This one's a really long balance, and I've been listening to the stock news, and people have been talking about how when this went up like this today, how Bitcoin's coming back. But unless it breaks out of this box, I wouldn't predict anything as far as it. It's staying in this area, and once it breaks out, it's going to go that way in a big way. And this usually follows the the S&P and the Dow and the Nasdaq anyway. And if the S&P and Dow and Nasdaq are ultimately going to head lower, I would not trust this going up. So I would think it's going to go down along with them. I mean, that's my feeling on that. So again, you got some balance areas here. It broke down into this balance area. And same thing with this. Broke down into this balance area. So if you were to trade this, you can probably get in a position there and maybe get out of a position there. And then it hits here and it comes down. So making another video on how to get into a position and out, because that's super important, and that kind of goes along with these balance areas. Because otherwise these balance areas, you know, they can kind of tell you where the market's at, but how do you know when to get in and when to get out? So that can be the tricky part. So there's several things that you have to pay attention to. But I use these. I use the balance areas because they tell me a lot. So I'll go into something that's unrelated. How about a futures market? Let's try the Mexican peso. Okay. This chart looks like it's all over the place. But you've got some balance areas right there. And you got another one there. You know, you got them. Here's a little one here. There's one here. They're all over the place. But again, you have to learn how to trade these. So I'm just telling you what the market will do. But as far as the balance areas, which I trade, you got to know when it breaks down and when to get in. Or this one went up. I mentioned before in my previous videos, I wait for the second bar, and this is a daily chart, so most of the time I wait for a second bar on a 4-hour chart, but a daily chart's a little bit more accurate. And here's the second bar, and it never went past, so not a good indication of market to continue up. And it comes back down. Eventually it went down here. And you got to, you know, look at the overall market. Like, what is this? Is this in a bear market or a bull market? Max chart. Sure looks like a bear market to me. So I wouldn't trust the upside that much. Here's a good one here. Look at that. It's doing the same thing Bitcoin's doing. Now if this breaks out, it could go up or it could go down, but I would wait for a breakout, and then again after the breakout wait for a confirmation. Here's another channel here. You know, there's little ones in here. So basically those are balance areas. Get back to let's see here. Actually this right here. This is a pretty good one. So this is Bed Bath & Beyond. I read an article about this kid. He's 20 years old, and he put money on, let's see, he made 110 or 160 million dollars on one trade. So how did he do that? He actually got in around here, and the market came up and it came back down all within a week. And he made about 120, I don't know, over $100 million on this trade. He did put in $25 million. That's a lot of money, but you know, look at this. This is pretty rare. So in a case like this, how would you know that the market's going to go up? Well, you don't really know all the time, but again, this is a balance area. Pointer. Okay, so if you are trading this, you know, this went all the way down to $5. They came from $38 or 30 bucks. And, you know, if it comes down here, It doesn't look like the market can go any lower. I mean, it can. It can go to zero, or not zero, but a couple bucks. But when a market broke out here, you could take a chance and start buying around here. Now, if this was definitely a bull market, that would be a great trade. So I think what the guy did is he either had inside information or he just got lucky. I wouldn't put $25 million on a lucky bet, but that's what he did. So, like I said, he might have had inside information on that. But either way, you still have this channel right here. Now, this market coming down, I don't see much of a channel here. Could probably draw one here. Right there. And so you got a little one here. It popped out and it came back, went into this channel, but it's not really that definitive. You can't really rely on this too much. But it did break down. And if you're going to get into this market and it is a bear market, that might be a good place to get in right here. And you can write that all the way down. So this is from April all the way to June. Just went down. There's another balance area in here. So these balance areas pretty much tell you what's going on. Of course, there's no balance area here to tell you, but like I mentioned in my other videos, I'm going to do a video on spikes. When a market spikes up like this, it's going to come straight down. And when a market goes, it starts spiking down. I don't see a spike here going down. When they do spike down, then they go the opposite way, and that's what these things do. These don't last. Look at this. This didn't last. This didn't last. That didn't last. And this is a big one. So I'm not sure what happened here. Pretty unusual for that to happen. But either way, you got it coming out of a balance area. And that's a whole idea about me explaining balance areas to you. Because for me, they're very accurate. And that's how I trade them. That's how I make my money. And we're back to here. This is today. This is tonight. And the market is making a little tiny balance area in here before it goes where? Well, I got my money on it going up. Of course, if it turns around and goes down, I get out. Cut my losses short. But we've got, let's see, where is it? Oh, I got this one here. Okay, so we got the Dow. You can see the Dow broke out of its balance area, and it's kind of balancing a little bit here before I believe it's going to go up again. But it is getting kind of close to that line, so we'll see what happens. And hopefully that doesn't prematurely turn around and bring the NASDAQ and ES down. But we're talking about balance areas, so what happened here? So we got another balance area right there, and you got another one here, and you got another one here. There's no shortage of balance areas, and that means there's no shortage of trades. You got a balance area here, it broke down, good time to get in right about here, even though here's another balance area. And then you can stay with it unless it breaks above, and then you can get out and take a small loss. Or if it stays in here and starts breaking down, you stay in it. And you got in here, and here's your profit right here. So again, I'm going to have to make a video on getting in and getting out. Getting in seems like it's pretty easy right here. And if it breaks up here, want to minimize your losses, you get out. But if you want to stay in and make some profit, then you let it ride down. But the question is how far down until you get out. So I'll talk about that in another video, and also scalping, which is you just trade it like from here to here and then get out. Wait for another balance area, trade it from here to here, get out. Wait for another balance area, trade it from here to maybe here and get out. And that's scalping. You're just taking some gains, and you're not looking for a top, even though it's going to keep going. You don't care about that. You're looking for these balance areas in order to trade, and you keep waiting for them like this. You got to be patient. And in here, so I got in here again. Actually, this is the Dow, but in the ES, that's what I did. It's the same, pretty much same chart. The only thing, this went higher. But let's say this is the ES, and I got in here, and then I got in here. I can easily get out here and then just collect this profit. And within just this range right here, you can make a lot of money. You can make thousands of dollars. It depends on how much you put in. But if you want to make more money, you just add to your position. That's it. It's really that simple. So you can make, $1,000 here. You can make 10,000 there. You can make 100,000 there. Depends on the position. But either way, this is the range right here, from here to here. Let's say that you're trading. So, yeah, this is interesting game. Back to the ES. So I'm not sure what more to say other than you trade these balance areas, and I think you're pretty safe as far as that goes. And again, I'll have to teach you how to get in, which I think getting in is pretty simple. But getting out is a part. If you start, the market starts coming up here and balancing, you might say, hey, I'm up, maybe $10,000, and that's enough for me. Even though it went up here, you could have made another, $7,000 or $8,000. But you don't care, because you're just, $10,000 just in a short time like this, that's pretty darn good. And these are all the things that you learn from experience, because there's so many people that would just keep trading all the way up, and then it goes down, and it goes down, and it goes down, and they go, oh no, I better get out. And then they lost everything. So you don't want to be one of those people. You want to just set your plan, maybe make 10,000 in this area, and then that's it, you're done. Wait for another balance area, which is this one, and you see it kind of hit this line here, and it's in the bear market, and you can say, okay, I'm going to get in here, and then you get in again. Comes up, goes down, and maybe get out here, and then it goes up again, comes down, and now you're in the market in here again, waiting for it to go up. It's actually that simple. But again, there's a way to get in, and there's a way to get out, and I'm going to go into detail about that. But basically, this video is about balance areas, and I use this. I don't really see a lot of traders using this. I don't know why. I see the professional traders use this, but these are the guys that you don't see. They're not on the front lines, meaning that that's what they call silent millionaires. These are people behind the lines trading, and they don't talk to anybody. They basically just trade alone, and they're really good. Some of them have been trading for 40 years, and I've seen them use balance areas. That's where I learned about this from my mentor. So, and I did change it up a little bit than what he was talking about, because here's a good example. NASDAQ. So NASDAQ kind of broke up here and came down. Now it kind of changed this balance area a little bit, because you got a bunch of hits up here, so now you can extend this balance area to there. So the balance area will change, as the market starts to grow. And so now this could be the new balance area, and you wait for this to break out. Yeah, but it's getting close to this line, so there's a chance it's going to break out and come even with this. That's a possibility, but we'll see what happens. That's if it breaks out, or maybe the NASDAQ is leading the way and going down. We don't know, but this is a either way, balance area. I trade it going up. If it breaks out, trade it going down if it breaks down. Again, when it breaks out, you got to wait for that that second bar just for confirmation. And you can set it different. You can wait for 3 bars, or maybe you'll trade on the first bar. I don't know, but I wait for the second bar, and usually it's on a 4-hour chart, which is right there. And so far I've got no confirmation there. And I got confirmation here. So does that mean the market is going to keep going up, or could it turn around and go down? Sure, it can go down. It can come back down and hit all the way back here again. But this is how you trade. You got these confirmations, and if it keeps going and it breaks this line and goes higher, well, then chances are it's going to stay in that direction. If it doesn't, and it keeps kind of farting around in here and then turn around and go down, then that could be an indication that it's not ready to go up yet, or maybe it won't at all, and just come down and break down. So that's part of trading, and I don't know for sure, but it like I said, tomorrow if it breaks through here and goes past, and I'm like, yeah, it's sounds like a for sure thing, and then I would put in some more trades. I would buy more above this because there's even more confirmation. Okay, I think that's it. This is pretty much balanced. I hope you understand what I'm talking about in these balance areas. And if you don't, you can leave some comments, and then hopefully I can read those comments and answer your questions. Okay, that's it.